What's up, YouTube? Nick Trades back with another banger for you guys. Today we want to talk a little bit about options trading, specifically the style that I trade, and how you can become a better options trader. So let's get right into it. We have this little presentation for you guys set up, and let's get right into it. Is trading easy, guys? Is it easy? Yes, trading can be easy. In theory, the idea of trading is very simple. Candlesticks, technical analysis, support and resistance indicators. Anyone can learn it. ICT strategies, all this. Yes, in theory, it is easy to learn, but the execution of trading is not easy at all. And that's, where traders start to struggle, is actual execution of these concepts, right? So today we want to talk about a little bit how you can execute options trades better, and I'm going to give you guys a few tips on how to find better options trades that actually do win and not get caught up in the noise of all these options that you hear on these trading platforms and not waste your time, okay? So step one is, especially being a weekly options day trader, you don't want to overpay for weekly options, okay? You want to pick strikes in reasonable striking distances. What this means is you want to trade and pick strikes that are actually realistic to that stock's price. For example, and I'm just throwing out NVIDIA as an example here, on an average day, NVIDIA moves $3-4 on a good day. So what are you doing buying 30 points, 40 points out of the money weekly options on NVIDIA? 90% of the time, you're not getting a 40-point move on NVIDIA, not even on an earnings move, right? So don't waste your time buying options that are not in reasonable striking distances, okay? If the option you're looking at can't 2x or 3x, so for example, if the option costs $100 and you don't think it can reach 200 or 300 bucks, maybe you should reconsider that trade and look at another trade or look at another option or a different setup, okay? And another thing, you want to know how much whatever stock you're trading typically moves, right? So you don't want to overpay. You want to trade stocks that are moving and moving within their ranges. If a stock moves $10 a day and you see it's consistently moving $10 a day, you want to look for things like that. You want to look for 10 points higher out of the money, things that are reasonable. Use common sense. Don't lie to yourself and have these false expectations, and that's how you end up losing a lot of money. So moving forward, we have playing what's working in the market. Way too often I see traders getting killed because they're chasing stocks that are down 70 to 80% off their highs. They're trying to bottom feed stocks, buying garbage, falling in love with stocks and solely trading that, and I'm not calling out any examples here, but people were falling in love with Tesla stock, Pinterest, Etsy, a bunch of garbage that doesn't move, PayPal, whatever it is. You can and that doesn't mean you can't make money trading these things. You can catch a big winner in those names that are down 70 to 80%, but if you want to become consistently great at trading options, you're going to need to focus on the stocks that are showing strength, the stocks that are moving with the market and leading. Or if, we're in a bearish environment, you want to focus on the weaker stocks, not the stocks that are holding really well while everything is dumping, So that's why, you want to follow the leaders or, the leaders in the downside. Whatever it is, you just want to follow what's leading the charge. That's where the cleanest and most reliable setups come. So don't get caught up, buying garbage, chasing and bottom feeding 70% down moves and all that. Don't waste your time. Buying less equals survival, right? Loss streaks will happen. I recently can recall, I had about a week loss streak. And that happens to every freaking trader. My mentors that have been trading for 40, 50 years, old people, they still take losses and they've been trading for 40, 50 years. It's unavoidable. So it's all about getting through that hump as fast as possible, and getting back in your flow. When I'm trading poorly, and it won't be the last time I trade poorly. It won't be, the first time I trade poorly. You have to size down. You have to go slower. If I'm buying 10 contracts on a good day, if I'm trading poorly, I'm buying 1 to 2 contracts until I get back in the flow with the market. If I'm not in that flow, I'm not sizing in with heavy size, putting on a lot of risk. I'm going slow until I get back. It could take me 2 months to get back into that flow of my win streaks or whatever. I'm waiting until I have that confidence, have back in the flow with the market to size back up. So buy less, go slow, go slow, go slow. That's my number one thing for you guys. Everyone wants to become rich overnight. This is not a get rich overnight. This is, you got to work towards it. You got to take shots. You got to take some chances, but you got to go slow in order to be there when opportunities are coming, okay? Moving forward. Expect zero is everything. You heard me say this in the first video. You're going to hear me talk about it in the next video. You will constantly hear me say expect zero. If you're expecting zero, you're sizing correctly. You can't get upset if a trade goes wrong because you expected zero initially. If you're also opening yourself up to catch full moves because you're expecting zero. You're not getting worried about being down 20-30% on an option. How often have I called a play at $2 and the trade goes down to $1 and you're down 50%? But if you're expecting zero, you're fine. You're following your plan, and then later on, those contracts were out of $400 or $500, whatever it is. You have to expect zero, and you will do better. It's a hard concept to grasp, but do it, try it, and it helps you size accordingly. You're not gonna lie to yourself. You'll buy less. You're not going to lie to yourself. And you're not going to freak out when things go south because it will eventually go south. Nothing is perfect in this trading world. So you have to go slow and be there, once again, when that opportunity is coming, right? And why executing trading is not easy. Most people don't have emotional discipline, right? If you start your day with nothing, the market becomes everything. And that's when emotions take control. So you got to go slow, guys. Control your emotions. Have a plan. Have some sort of set structure. Already know when you're coming to trade what stocks you're going to hit if stocks are rising that day, or what stocks you're going to short if stocks are dumping that day. It's simple as that. Don't make it complicated, And do something hard before trading. You guys know that, I like running, working out. That's, what's good for me, whatever it may be, whether it be walking your dog, getting up a little earlier, reading, a book, whatever it is. Just do something hard before the market opens, because if you don't, trading will feel like the hardest thing you did all day. And that's when it rocks you, beats you, and I promise you that. Do something hard before you trade. So trading is not the hardest thing you did that day. But people will, I say this every time, but people will still not do this part. So maybe, if you're not getting the results you want, take a look at this and, ask yourself, am I doing something hard before trading, or is this the hardest thing I'm doing all day? Real quick, this is the fun part of the video. We're very fortunate to have profited almost $5,000 last week in the first week of December. And, hopefully we keep that momentum going, just doing what we do best. But let's just kind of go over some of those trades. And as you can see here, we had some of our new guys, brand new, doubling their portfolios. We had Roger that making $200 off Goldman Sachs. The list goes on and on. We have King, Base God, making over $500. Some of our members doing really, really amazing stuff. And, all they're doing is expecting zero, not over risking, and they're doing amazing, right? So let's kind of go over this first Goldman Sachs setup. We knew that if this stock was going to get over 809, it was going to start running. So we take some shots, right? We knew that if TNX or interest rates dropped, we knew that, Goldman Sachs could rise, and we took some shots. We bought right here the 850 calls at 4, knowing that if it went going through 826, it could really start moving. And that's what we did. We just put ourselves in that opportunity to be in a winning trade. We bought these 850 calls on the December 2nd, I believe. And we were selling them by Friday for $11, 4 to 11. Like I said earlier in this video, if I don't think that option can triple or double, I'm not buying it, right? So just have to be able to read price action, really understand how stocks are going to move, and just put yourself in that opportunity, Let's go over to the next setup. This is a tech stock named AppLovin, which we love. Been a big mover this year. We know that if NASDAQ really starts moving, this one is a big runner. Typically, runs $20-$30 in a day. And that's what I went back to earlier in the video, knowing how much stocks move per day. We know if the market gets going, this one's gonna run $30, right? So we put ourselves in the opportunity. You know, I took a very patient entry. I don't guess. I never come into the market guessing what's gonna happen that day. I just let the market show me what is happening. I don't go in here, oh, I think app's gonna go to 700. No, I'm showing, the action is showing me that this is possible. I'm not here predicting. I'm reacting. We're reacting to the price action. We're reacting to what's going on, right? So here's another one, and you can see the patience. As you can see here, we bought app on December 1st at 11:50 in the morning. As you can see here, we bought them here at 11:50. Stock was already up a decent amount that day. So we knew that if it got going and NASDAQ got going, you know, these contracts could double, triple. You know, and look at the patience. We had to sit on our hands for about 12 hours to the next session. And, you know, we buy these 650s at 5. We sell them at 10. We sell them at 12. They ended up running to $3,000 a contract. But we take our gains. Nobody went broke taking a profit ever. But another beautiful trade, right? So you go slow. You grow your account, right? And then you take some big shots. And this is how you make money in trading. You go slow. And then we take some shots with Carvana. This Carvana trade is a beautiful freaking trade. And the reason, if you're doing due diligence, you know that the S&P 4 times a year has a rebalancing quarterly, and they change, you know, what's in the S&P. Carvana was a recent big runner, ran from 350 all the way to 400 in about a week. You know, it met all the criteria to possibly enter the S&P. You know, we went slow all week. We grew our account, and we play with profits, and we put ourselves in that opportunity to catch a big move. If you're doing your due diligence, you knew that this S&P rebalancing was going to happen on Friday, and guess what? Marvell and Carvana were the top 2 intriguing candidates. We also had Reddit because we, you know, thought maybe Reddit would get in, but, you know, we put ourselves in the opportunity to catch a move like that. If you do your due diligence, you knew that this was a possibility, right? So did a beautiful trade there on Carvana. And if this holds on Monday, we call these out at around $300, $320 something there. And they should open up $1,300, $1,500. If Carvana keeps running 650, we got 2 weeks left on these. And, you know, those can go 3 to 20, 3 to 40. But like I said, did I think the option could 2 to 3x? Of course I did. So we took the trade and we expected 0. We don't oversize. We expect 0 and we go slow. And here's the call out. Boom. You know, I said right here, both of these stocks are rumored to be added into SPX after hours. Maybe they get added, maybe they don't. You know? So boom, 3 to 13. And when you go slow, you open yourself up. You're there. You have the opportunity to, you know, get a move like this. You have to take shots. Now, not all your shots will work, you know? Sometimes you're going to take shots and you're going to lose. But if you don't over leverage, you don't kill yourself, you're still in the game of survival, and you're there for one of these big opportunities. So, guys, I totally appreciate you guys listening to this video. If you made it this far and you want to catch moves like this, you want to, you know, get this information, and, you know, we stay very on top of the news here at Playbit. So please feel free, use my link in bio, check us out. You can catch moves like this, you know, from myself and the other guys in the team Monday through Friday, every day, putting in great content for you guys. And we're going to keep doing it. So, you know, I really hope you guys learned something from this video. I know I dropped a lot of knowledge very quickly. So, you know, maybe take a chance and re-listen to this if you need. And feel free to ask me any questions down in the comments. Happy trading, everybody. Keep going. You know, we're entering into the 2026 season. Who knows what's going to bring it? You know, who knows what's going to happen this year in the market? But we don't predict. We just react. And we keep expecting 0. Have a good one, everybody. Nicky Nick Trades, out.